Hey everyone, it's Sterling here from Day Trading Forex Live. I just wanted to throw on the camera to catch this trade here. We had taken I had taken the entry from uh, on this pullback, and I want to get into why I took the trade and what I'm actually thinking as far as where I'm looking for this trade to go. I ended up taking this is a 15-minute chart of the pound. Ended up taking a short on the pound, and the reason I did is we were talking about this level in the room today before we left. It's a 6,200 level. So we start. One of the things we look for is a confluence of events to believe or to lead us to believe that they're going to manipulate the price around that point or break through that point to create a stop run. So in this case, we had this nice stop run candle through this level. The reason we like this level, and we'll probably continue to like this level through Asia unless I get proven wrong and we continue to break up. The reason I like it is because it's number one, a psychological barrier, 6,200, and it's a previously proven level of resistance. And so anybody that is short is going to have, from the retail side, is going to have their orders above that point. And also, you have a lot of traders that are trading the breakout through 6,200. Those that are using the stop loss of 6,200 as a stop loss area to put their stop above that. So when I see the market break through that and get rejected, to me that starts to look like a stop run. And I use the 50% retracement general rule that a lot of times we use, and what that is on this stop run candle. I used this candle was about 10 pips. So what I did is I waited for the second candle, this candle to close, and I waited for this next candle to open, and I waited for it to pull back half the length of that candle, which was 5 pips, pretty well pulled back to the point I got filled short at 62.02. And the reason I was taking that trade, why I was taking that trade, is I was essentially just taking out the 50% pullback, assuming that that is the stop run candle. If that is the stop run, the move usually starts from the stop run. The stop run is the last bit of information you get before they tend to drive the price. One of the great things about this trade is if you look at this from the entry of '02 here to the highs, you're talking 6 pips. So right now I do have a 20 pip stop on it, but that's just an arbitrary stop I throw on every trade initially. This trade is going to allow me to more likely, at the very worst, tighten the stop down to 15 pips, which is what I'll be doing here shortly. But the reason I took this trade, and I want to get into this is important. We were talking about market cycle today a bit in the room, and we've had our first push down, obviously, a few days back in the pound. We've had our second push down that we were expecting last night. And again, had that second push down. But the thing with the second move is we haven't completed 90 pips. We've only moved about 73, and as a general baseline rule, we like to see the market. Nowadays it's a little bit shy of 90, but a lot of times that's a good factor for them to, or good distance for them they tend to move the price. And so when I see it shy of that 90 pip area, or even shy of 80 pips in this case, because we are a little bit tamer market nowadays, it starts to make me believe we're still going to see some continuation. On top of that, and I'll zoom out here a little bit, we have this blue block that I had set up, and I had left this on from the room today, and there's just a series of reasons to believe that this is going to be the point where they're going to reverse the price. Number one, I'm going to measure down from the start of the move up here, and I'm going to measure down 90 pips, and that puts us right here at 61.45. That's the low of this block. So that's where 90 pips is, and that's where I'd like to see him move it into. It's a general baseline rule we like to see. The second thing that I'm going to look at here is the fact that this was the ADR low, and so I'm going to try and get rid of this block actually. Let me zoom this out real quick. Get rid of this block. So, anyways, being that that is the ADR low, we have that's a second reason to believe that okay, hey, they may reverse the price at this point. On top of that, it's the hourly 200 EMA, very strong point, and that's why at the end of a move they generally tend to end a move with a stop run at a higher probability level, or a level where there's going to be a massing of retail orders. So in my belief, the ultimate direction, it may come down here, create a stop run, and ultimately move up. But in order to get to the move to the upside, it's going to have to get down to this point. And from my entry, of 6202, you're talking, even if you're just going to this ADR low, you're talking 50 pips. So at the very worst, it's going to allow with a 15 pip stop from this point. It's going to allow for bare minimum 2 to 1. Even just a test of those lows is 40 pips. So bare minimum, it's going to at least allow for 2 to 1, and that's a very a good baseline rule when you're getting into a trade. At least for myself, if it's not going to give me at least 2 to 1, I don't even consider the trade. Because risk reward is, as I always say and always will say, is the determining factor of a profitable trader. I've never known a trader that isn't or that is profitable not maintaining a positive risk reward of 1 to 1 or better. Oftentimes much higher than that in the 3 to 1, 4 to 1 range. So that's why I like this trade. I think I had a lot of key points with it, and we'll see what kind of follow through we get on this one, and we'll be back with the management again. I'm going to step the stop down to 15 pips, and I'll be coming back later with the adjustment on the take profit as we progress down towards those lows and that higher probability manipulation point. So I'll see you guys back in a little bit. Alright guys, so we are back on this trade here, and what we're going to do is I'm just going to go over why I'm exiting this trade. I was getting out essentially a break even. It was a couple pips up, but what we'll do is we'll go through here. And as you can see, obviously, from that stop run candle, and I'll go ahead and mark that here, but from that stop run candle, that was a reason for the entry. And the whole principle behind a stop run is that should be the last thing that happens before the market moves. And so as you can see here, through this time, we've gone about 3 hours now, and we've really had no progression. It started to look like we were going to break down, but we've really had no progression. So from that stop run candle, I just get a little bit worried about the fact that that could may not be a true stop run. And it's very similar to what we saw yesterday in the trade we saw yesterday, and the fact that thing took off relatively quickly, and that's what you want to see with the initial stop run. And obviously you can view that video as well that's posted. So to me, it's just a safer option. We're getting into the time factor, the fact that we're getting into now 2 p.m. and when we get into that time factor of 2 p.m., we're really out of the time when we're typically going to see the market make a sizable move. So we've exited the prime time. There's a reason we try to trade between 2 to 5 and generally 2 to 5 and 8 to 11. And so when we step out of that time, I get a lot less comfortable with the trade actually having some follow through, because we're really getting into a time in the market that is very dry, and it just very simply doesn't have the money going through it. So the principle of this stop run here, and really any stop run, is that just to kind of reiterate the point, is it is the last. You look at the stop run candle here, very convincing, and if that was a stop taking move and they were really going to start from there, then I would have expected to see him continue it off a little bit earlier, and so not seeing that. Not really seeing the follow through after following that candle, to me is the point that it makes it safer. We get into the time factor coming into the end of the day. It's just really not worth holding on to the trade. And I think the best thing to do here is limit the risk, take the break even trade, and move on from there. We already had a great trade earlier on in the day, so there's no point in forcing a trade here and trying to capitalize on something when it's just not there. So as always, guys, if you have any questions, make sure you go to the site. A lot of information. If there's something you didn't understand in the video, more than likely it's covered in our other videos. So feel free to check that out. As always, you can shoot us an email, and we'll be happy to get back with you as far as that's concerned as well. And really, the email, if you have the questions that are not answered through the site, which there's a lot of articles and videos again on the site, but if it's not answered, make sure you shoot us that email. We're more than happy to respond and get back with you and answer any questions you might have on the strategy or any other questions in regards to trading the smart money setup. So as always, guys, it's been fun, and I will see you with the next video. Until then, happy trading.